Hello, everyone, and welcome back to the Daily MENA Market Call. I'm Razan Hilal, market analyst with Forex.com. Today is June 10, 2026. I recently had the US CPI jump once again, the year on year, up to beating market expectations near 4.2%. So now we have US inflation near 3 year highs last seen in 2023, which definitely will uh, leave more room for a hawkish stance for the Fed and more support for the US dollar index against the markets. And recently have a solid hold for crude oil prices in line with ongoing tensions between the US and Iran that is keeping the overall conflict in the Middle East stalling towards a potential resolution, keeping the markets in a stagnant state and extending in consolidations. And one key concept to remember that is also derived from technical analysis is that the longer consolidations extend, the steeper the breakout in either direction may be. And that goes for the currency market. It applies as well across the crude oil that has been in an extended consolidation since March 2026. And we're facing now sharp drawdowns across major commodity markets, including precious metals, gold, and silver, and across US indices, and we will be measuring the downside volatility risks across these charts for potential dip buying opportunities and potential short-term drawdown risks. Okay, the 1 minute disclaimer is up, and we'll be starting with the US dollar index to measure the impact of the US CPI. Now, since it met the market's expectation, which is near the 4.2%, we can see a sort of an extended consolidation on the charts, no sharp moves. We had a sharp drawdown for gold prices before the release of the CPI report, yet the overall market seems to have priced in that drawdown. We can also see a slight rebound for Nasdaq as well as silver. So we go over the key charts one by one. If you have any question or any chart in mind, please let me know. With respect to the US dollar index chart, I'm going to drop down to the daily time frame. We can see a fragile hold here below the 100.20 mark. The key resistance to watch on the DXY would be the 100.60 mark, which is a multi-month support and resistance for price action since 2023. Should we have a sustained hold above this level, we can definitely be expecting further pressure across precious metals and global currencies. Should we have a sustained breakdown below that multi-year uptrending channel spanning from the lows of 2008, we can be expecting a steep drawdown, which is below the 95 to the 97 zone. Then we can have an alert for extended upturn across global currencies in line with drawdown on the US dollar index. That's for the DXY. Next up, we have crude oil. Gonna analyze crude oil from a 3 day time frame, minimizing the noise on the daily time frame. I've been analyzing gold across this daily MENA webinar every day now. And just a quick reminder, this webinar runs every Tuesday to Friday, weekly Tuesday to Friday, covering major markets between commodities, indices, and cryptocurrencies. Now, looking at the US oil chart from a 3 day time frame perspective, we can see momentum leaning towards a bullish bias, as well as price action attempting to have or record a bearish breakdown below the bounds of that extended consolidation. Now, should we have a sustained hold for price action below the $85 mark, this is the key level that is in focus to be able to confirm whether we do have a sustained breakdown for crude oil prices in line with potential oil market resolution. Then we can be expecting prices to potentially drop down towards the $78 mark, in line with the highs of last year's Middle East conflict near June 2025 highs. And the sustained hold below that, I did rewind these levels from last year, the last webinar, and the next key level is the same one that I mentioned the last webinar, which is the 67, a previous support and resistance to price action. Now, these levels are derived using Fibonacci extension tool of that overall wave, spanning between the highs of February 2022 minus that extended wick, lows of 2025, and the highs of 2026, where we can see that these levels align with the golden 618 and the 786% Fibonacci extension ratios, respectively. Now, on the upside, should we have a breakout for or a sustained hold for price action within the bounds of that consolidation, alongside a sustained breakout above the mid zone of that consolidation, which is near the 94 to the $96 per barrel, we can expect price action to revisit the upper bound of that consolidation near the $100 per mark, or either another rejection or potential bullish breakout, aligning with short-term resistance levels between the 106 and 111, and of course the highs of this year near the $120 per barrel. If not, a sustained hold above this level should be able to extend further bullish confidence for higher highs for crude oil prices this year, potentially targeting the 135 and the $158 mark. And these levels are outlined and defined using Fibonacci extension tool placed between the cycle of 2020, 2022, and 2026. Of course, removing the extended volatility on the charts. That's for crude oil. Now, if we drop down to daily time frame where we have a bit more volatility, we can also clearly see that a bearish bias on the momentum, yet we're still waiting for the confirmation from the price action of crude oil. Okay. So next up, we have the gold chart, which is tracing steep drawdowns, facing the lows of this year, which were near the 4,100 mark. Currently, we're fluctuating above that 4,140 support. I did refine the levels on the gold chart to adapt to the current patterns that we are seeing. And should we have a sustained hold for price action below the 4,140 mark, we can be expecting another drawdown to new yearly lows, potentially aligning with lows of October 2025 near the 3,970 and the 3,870 zone respectively, for potential dip buying opportunities, uh, initially short-term selling opportunities and potential long-term dip buying opportunities. As we can also see the momentum here, tracing a steep breakdown below that multi-month consolidation on the chart, and oversold momentum levels aligning with yearly lows. Should we have a steeper scenario play out, we might have momentum drop down to the lows of October 2023, also potentially opening the path for dip buying opportunities. Now, should we have a long-term projection for gold prices to extend their bearish cycle, a sustained hold below the 3,800 if that zone did not provide a long-term dip buying opportunity, or if prices revisited that zone for another key bearish breakout, we can possibly expect gold prices to drop down towards the highs of or a resistance that capped price action across several months in 2025, which is near the 3,500 mark, another potential long-term dip buying opportunity on the gold chart. Now, on the upside, gold prices need to reclaim that resistance levels above the trend line, connecting consecutive lower highs since March 2026 to be able to set foot or reflect bullish buys on the charts once again. So we need to clear out the 4,240 along with the 4,360 level here. This is my key zone. The 4,360, should we have a sustained hold above this level, we can have potential bullish shift or confirmation for bullish rebound on the gold chart that can potentially target key levels in 4,640 and 4,770, the high of that previous diamond that gave way to that latest steep sell-off, and also test the major resistance here, which is the 4,900 for a bullish sustainability test for either a breakout towards a record highs or another potential consolidation or pullback risk on the horizon. These are the key levels on gold. Next up, we have the silver chart. I also defined the silver chart or the key support levels on the silver chart, which is the 63 support over here, defined using Fibonacci extension tool, also of the cycle spanning between January 2026, March 2026, and May 2026. So taking that as a corrective pattern. Now, the 63 support here inside a sustained hold below this level may possibly extend drawdown risks towards the $59 mark. And should we have a sustained hold below that, we can possibly revisit the 52 to the $48 zone. As I previously mentioned, also potential long-term dip buying opportunity as we be aligned with a multi-decade resistance spanning from the highs of the 1980s. From momentum perspective, we're also near oversold levels last seen in April 2025, and there is possibly more room to reach the oversold levels on the daily RSI. And we're watching them in terms of price action level by level to be able to not get trapped in any bull or bear trap and potential high volatility fluctuations as we navigate that critical market condition. Now on the upside, should silver prices reclaim back the $66 mark, we can possibly retest key levels between the $69 mark, the 72.70, and further in the year at the $77 mark. Above that level, we can possibly start building more bullish conviction and have more confidence in a bullish rebound, potentially realigning back with that overall uptrending bias that has been or that was respected within the bounds of that uptrending parallel channel spanning from the lows of March 2026, where we can possibly realign with key levels near the $84 mark and definitely that $90 mark or that uh, long-term bullish sustainability test that can open the way back towards record highs on triple digits and record highs on the silver chart. Next up, we have the Nasdaq. Also refine the Nasdaq levels. I'm going to trace out the way that I define that using Fibonacci extension tool, uh, aligned with the latest volatility that we saw on the charts yesterday. I'm going to place it between the highs of June 2026, the lows of June 5, 2026, and the high, that latest volatility high, where we can adjust or where we can see, just adjusting it over here. Okay, this makes more. Okay, where we can see that the latest rejection here was near 618 to 28,500. The next one was the 28,200. And the next key levels in sight would be near the 27,700 and the 27,200 marks for potential dip buying opportunities. If you translate that on the momentum, we can see the momentum is also fluctuating our size back near the 50 neutral zone, which is also lifting um, pressure for another potential leg lower should we break below that previous June low, potentially targeting oversold levels also last year in March 2026. We might have that bearish outlook on the Nasdaq chart, which can possibly open the path for the buying opportunities once again. A quick reminder, we have the SpaceX IPO also coming up on Friday for potential high volatility risk on the Nasdaq, where we can have potential fund rebalancing as SpaceX uh, enters the market, being the biggest market IPO in history with near 1.75 trillion valuation. On the upside, key levels to watch on the Nasdaq would be between the 29,200 and 29,700. Sustained hold above this level would likely open the path back towards the 30,100 and the 30,400, or that long-term bullish sustainability test. Either we have a pullback risk or extended bullish forecast back towards record highs. Another key level in sight here towards record highs would be near the bottom bound of that uptrending support connecting higher lows on the Nasdaq, and that would be near the 31,700 mark. That's for the Nasdaq chart. Next up, I'm going to go over the Bitcoin chart, which is also still reflecting that bearish caution. We did have a bullish rebound for the Bitcoin chart from the 59,000 mark, in line with steep oversold conditions last seen in February 2026. Yet you still have a sharp price action open here below the 65,000 resistance. Previous support turned into resistance. So should we have a sustainable for price action of Bitcoin below the 59,000 mark, we can have another potential 10,000 point drop near the 50,000 mark for potential long-term bullish or dip buying opportunities in line with steep oversold conditions seen on both the daily and the weekly time frame. On the upside, should they have a sustained hold above the 65,000 mark, we can possibly look back at key levels between the 68,000, 71,000 here, and the 74,000. Similar numbers seen on the silver chart and similar patterns seen on the silver chart can also be detected on the Bitcoin chart, uh, where we can also have another potential test for either another pullback risk or extended bullish breakout back towards key levels between the 78 and the 83 over here for extending back or building that bullish conviction back towards the 100, above the 100K, and record a forecast on the Bitcoin chart. Last but not least, we have the UAE MSCI, which is definitely facing short-term bearish pressure in line with the latest drawdown seen across US indices. Yet the overall price action is still holding well near the bounds, I can say, of the uptrending channel connecting consecutive higher lows since October 2023. Of course, we have a potential bearish inclination for the price action here, still not confirmed until we have a sustained hold for price action below the 1830 mark. That can confirm potential uh, bearish shift back towards the low of this year near the 1740 mark. Either another bullish rebound from here or extended bearish forecast towards the 1670 and the 1550. On the upside, as I previously mentioned in the previous webinars, should we clear out the 1970 and the 2070 on the yearly MSCI, we can be looking at a large potential bull run that would potentially align with the target of that inverted multi-year head and shoulders formation in line with the overall long-term bullish projections across the US indices. Thank you very much for watching, and please let me know if you have any questions. Feel free to answer those in the chat box here or on the comments after I post a video on our Forex Middle East YouTube channel. Thank you for watching, and I'll see you in tomorrow's webinar.